So what is reward to risk and how do we get good reward to risk? This is related very closely to risk management. And of course, we want to risk the amount of pips which is similar, if not less, to how much reward we're going to get, potentially. So in real terms here, reward to risk is the amount of pips that we or you will be rewarded on a successful trade outcome divided by the number of pips that we risk losing if the trade goes the other way and loses us money. So again, we look to work this out by dividing the pips of reward by the pips of risk. So for example, if we are looking to make 400 pips from a particular trade setup and we've only got 100 pips of risk, then we have a positive reward to risk and we're looking to potentially make 400 pips. So it's a 4-to-1 reward to risk trade. So imagine that we had a winning percent of 75%, and that means that we win 75 trades out of 100. That would be fantastic. However, there is one slight hitch. Let me describe this. So if your losses are much larger than your 75 wins, say you've lost 25 times, but you've won 75 times, then we want to make sure that our losses are a lot smaller than our 75 wins, because otherwise it would be absolutely pointless having this reward to risk mechanism. We are serious. I know it might seem a little bit counterintuitive, but let's have a look more closely. Say, for example, on a winning trade, you win 25 pips, and on your losing trade, you lose 100 pips. Your losses are therefore 4 times the size of your wins. So even if you have more winning trades than losing trades, you'll still ultimately end up losing more because your losses will far exceed your wins. We don't want that to happen. So for example, out of the 75 trades which are winning and you make 25 pips per trade, you make 1,875 pips. However, out of the 25 trades that you've lost, risking 100 pips, you've lost a total of 2,500, even though you might have had a much higher frequency of winning trades, 75 versus 25 losing trades, you've still lost more pips and in monetary loss as well. So it can be a little bit deceiving, but as long as you realize this, then you'll be head and shoulders above most people who try their hand in it. And this is really a very frequent rookie error. So we always want reward to be at least twice the size of the risk. So if we're risking 100 pips for a particular trade, we want to look and pursue an opportunity which has at least 200 pips. Or if we've got 50 pips risk for a trade, we want to target an opportunity which has at least 100 pips reward, and so forth. So remember that the reward potential must at least be twice the size of the risk. So we can win 50 times and lose 50 times and still be profitable. Like for example, with your winning trades, you win 50 pips, and in your losing trades, you lose 25 pips. Your wins are twice the size of your losses, so that you can afford even to have more losing trades than winning trades. And even though that might feel like a horrible situation or a horrible place to be, you're still in a monetary gain overall. Even if we're risking 3-to-1 per trade, we can afford to have, out of 10 trades, 7 losing trades. Say, for example, if we've lost 7%, risking 1% out of those 7 out of 10 losing trades, yet the 3 winning trades we've hit our 3-to-1 profit potential and we've made 9%. The difference between 7 and 9 means that we've still made 2% overall. So I know that might be hard to visualize, but it just underscores how important it is to have positive reward to risk, because it means that your wins are more than your losses, and you can afford to even have more losing trades. Okay, so let's look at the numbers. Say if you have won a total of 2,500 pips, 50 winning trades times 50 pips won per trade versus 25 losing trades, risking 25 pips per trade, then you've only lost a total of 1,250 pips. So it's a winning proposition. Fantastic. That's where you want to be. Keeping the risk low and the reward high. Simple. So how do we get a good reward to risk? Let's have a look at this. we have what is known as a bullish pin bar reversal here, based on one of the strategies which we teach in the members area, and we have our entry halfway down this bar, and our stop loss below the low minus spread minus a few pips. So as we can see here, even visually without counting a number of pips, the difference between our entry price and our stop loss is 6 times less than the difference between our entry and our target, which is fantastic because it means that if we are right, then we've got 6 times the risk as a potential gain to our trading account. And of course, in this hypothetical example, it goes and hits target. However, we do have a very high reward to risk trade here for the purpose of this example. And this is really what you should be going for off the back of a positive reward to risk. You'll be getting, even if you get more losing trades, you'll still be getting a positive reward after all. So make your wins count. And this is how we trade at the Lazy Trader. We trade in a very low frequency, high quality, high probability trades with a high profit potential, where we can afford to be wrong even more times than we're right. But that's fine because the trades that really do come home and hit target are typically 5 to 1s, where we risk 1% in pursuit of 5%, or even 10, 15, 20 to 1s. And that does happen. And this is how we trade.
What do you think of that? Trading does not have to be difficult or time consuming. In fact, all you need to become a profitable lazy trader is a single strategy which you can trade for only minutes a day. Visit thelazytrader.com and download for free 5 rapid ways to become highly profitable at Forex trading, and your trade secret video pack, so that you can copy the winning elite and rapidly accelerate your long-term success in financial markets trading. Trade profitably from as little as minutes a day and beat the banks and brokers at their own game. This is available for a limited time, so download it today. www.thelazytrader.com. It's free, fun, and most importantly, it will help you. Visit thelazytrader.com.